Give us a brief history of the market, how you've experienced it, and the journey that culminated in this Naira-Settled OTC FX futures market we're launching today.
Well, again, let me say that we were just riding on what the likes of Funke, Oshibudu, and Poe did. I recall the days of when Sven came, when money market first started, and all the people needed to do was to gather up at the front of central bank. It was then the stock exchange house, how people then agreed how to bid, what to submit. And that went on, and people then decided to look at how can we improve the things we do in the market. And I recall when I took over the president of the money market then, 2000, we then decided that we're going to set this up, and we gave ourselves five points objective. And looking back now, if all the 5 has been done, and then that's when we set up the futures engagement. And Tosin was in charge of NIFES, and Coco was the chair of the group. And we had meetings with stock exchange. We went to look at Abuja Stock Exchange, all with a view to seeing how we can get it started. And like you heard, maybe we're too relaxed and we didn't see the need to do it now. But given the challenges we face now, I'm glad that we're seeing it alive, and it's something that Nigeria needed long ago, and something we're going to kickstart.
Just coming here from a banker's point of view, from treasurer's point of view, it's been a long journey down this road. Do you think, looking back, perhaps the market was not prepared then, perhaps you operators weren't prepared back then? Or were you prepared? It wasn't just time for it.
I think we were prepared. I mean, if you look at the amount of work that was done, the group, we were part of the Money Market Association of Nigeria, and we set up a special team. First, we set up a team that worked on NIBOR, and NIBOR was, realized in the 90s, and then we set up a team, to look at NIFEX. And Coco was the chair, of that particular team. But you could say that maybe we got distracted. There were other successes that the market recorded, and perhaps also we looked at the environment and we felt that the policymakers maybe were not ready, for the big leap. And over the last few years, we have seen, how, the markets have transformed. We've seen how Nigeria itself has transformed in terms of being so important now to trade in Africa. And I think, let's just say that maybe the time has really come, and we have to praise the steadfastness of those who have kept it and who have ensured that today is really happening. Congratulations, of course, to Coco.
Your name keeps cropping up in every conversation here. What happened in the intervening years? Was it the boom in the stock market? Was it because there were interventions in the banking sector? You alluded to the 2009 bank intervention. Perhaps that was when the wake-up call actually came.
Thank you, Bosun. I don't think there was distraction. I think it was about timing. And you had the founding chairman of FMDQ, Mr. Aigboje, I give more credit, talk about it. Don't forget 2009, there was consolidation. And then prior to that, there was the GFC, the global financial crisis. So everything at that point, and it looks like these initiatives come after one crisis or the other. So, I mean, after that crisis, the Bankers Committee, where I was then the chair of the Economic Development and Sustainability Subcommittee, saw the importance of organizing the OTC market. All over the world, they saw that the OTC market caused the crisis. And Nigeria, for the wisdom of the Bankers Committee, decided to have an authority, a body like FMDQ, to champion that development. So I don't think there was distraction, although a lot of my colleagues went into, capitalism to make money, and we're very happy with that. But they did a lot of things that kept validating the need to have this market. Most of them kept serving in various committees, various initiatives to get this going. But I think the clincher was what Mr. Aigboje Agimokwede said, FMDQ. Now we had a body mandated to think of market development 24/7. I mean, all my colleagues that work at 40-something now, this is what we think of every day. So what we've just done is to go back to all the great work done by Tosin Rishewe Jayola when he was president, Tosin was general secretary, Nero Adirogba, Funsho Shobande. Some of them are very strong on docs, we call them. They bring all these things out. And as Jai said, some of these things have been said or written by Fola Adeola or Agimo Kwede at some point. So what we're doing is just gathering all these things. So I think what was missing was that body focused on implementation. And I think that's what the market, the bankers committee, the central bank has done, you know, by establishing FMDQ. And now this house is the financial markets powerhouse and is mandated to, you know, drive the gold agenda, ensure the Nigerian financial markets are globally competitive. That's the G. Operational excellence is very important. Systems and all these things being driven by some team here, you know, highly focused team. L, liquidity, which we're working on, and then D, diversity. Those are the meanings of the acronyms GOLD, and that's the GOLD agenda that the board, you know, then led by Agboje, the founding chairman, has challenged FMDQ to focus on. So I think that was the missing link. There was no distraction. They've gone, but I think they're coming back after seeing that they needed, you know, some house like this to ensure they protect their net worth.
It's really good.
Great.
Allow you, for example, step out of the money market, the FMDA. We're now with the NESG, so we're going to talk about this, talking about the broader economy. Now, in terms of this Naira-Settled OTC FX futures market, a few allusions here at the event today about how does this help the broader economy. Give us 2 minutes of that before we take a break. Talk to us about, very quickly, how does this help the big economy, Nigeria in itself?
Well, again, some of the challenges we have, particularly when you talk about FX rate, is the fact that everybody front load whatever it is they want to do. And therefore, because the demand far outstripped the supply, whether or not that demand was needed or not, that had a pressure on the exchange rate. But now you have the time to plan. And the method that we can stagger and plan this makes things a lot easier. So that pressure on the exchange rate is not there. Secondly, the fact that you can plan, even as a company, makes it a lot easier for you. So you know when you're going to import your goods, you know when you're going to have sources of FX to sell. I mean, you've seen First Bank, CBN as a first pioneer seller, but our expectation is that corporates in the future that know when their flows are going to come can sell ahead, and that makes better planning, and this will allow more liquidity in the system. And once we are able to deliver on a transparent basis, and all the systems around that people have alluded to, I mean, all the systems to make this work is tested. I mean, Coco said something about FMDQ. The method that we have an FMDQ, it makes it easy for these things to run on a very transparent basis, and that will then bring the confidence that operators are looking for, all stakeholders. What they want to show is that there's confidence, there's efficiency, there's transparency, and everyone will come on board. So in the long run, it helps the economy, it diversifies our source of funding and our source of supply, which will come whether through portfolios or through direct investment.
Let's begin to look into the future. Some of what we saw today, Coco, was what the central bank signed on, I guess, late last week, some of those contracts already. And folks were reading those data of those contracts and maturity date, as well as the Naira value for the future for the dollar. How will this work moving forward? Are those contracts valid? Were they just prototypes?
Of course, the central bank has put those quotes out. When buyers come on the system through their authorized dealers and click on them, then that is a valid contract. The way it's set up, both parties are going to be margined. My colleague Tumishe Koni talked about the counterparty risk to ensuring that is minimized completely. Whilst the banks, the authorized dealers, are going to put down collaterals because we don't want to keep drawing their cash so they can do business, they pledge the collaterals with NIBs. The central bank is going to be margined. So on that settlement date, the cash is not coming from central bank. It's already been taken off the central bank. This is serious business, and central bank means it. And it's great for the economy. If you look at it, federation allocations today can be sold ahead to central bank. So central bank is in a unique position. Is a buyer of foreign exchange, is a seller of foreign exchange, is also driving monetary policy implementation, financial system stability. I mean, I wish I was 20 years younger, quite honestly. But someone's got to do this job. I mean, the traders, they're going to have a great time. And I think Sonia already talked about it. You need serious FX dealers in the market. And the jobs that are going to be created from this, we don't understand it. And mind you, I mentioned it again, when the idea of FMDQ was presented